Good morning, traders. It's 8:01 a.m. Chicago time on Monday, the 9th of January, 2023. We have a new PC, hopefully, or I went back to my old trusty PC, but I doubt that it's the PC that's the problem, it appears. Anyway, thanks for joining me. This is episode number 2388. It is 8:01 a.m. Chicago time here. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's what we've got today in terms of the pre-market summary sheet from Convergent Trading. Markets really holding on to the gains from Friday. And mostly over the weekend, the flow is that the flow is the China reopening. Really, that's the theme. The China reopening. Yes, there's some there's some stuff flowing over from the unemployment report, the non-farm payrolls report, the softer earnings and stuff. But really, China is the big story here. It's opening up for travel. It's opening up for trade. So we're seeing a reaction in crude finally, which has been somewhat oversold here. China to cut VAT for small businesses until December, and really that's the theme. So we need to keep an eye on whether or not the market, the market seems to be anticipating a soft landing here, and so is responding accordingly. So we have a pop on all risk assets across the board. The U.S. government, the Congress impasse has been cleared with California's Kevin McCarthy realizing his dream of being the Speaker of the House. But at the same time, this weekend, timed to align with the attack on the U.S. Capitol. The protesters in Brazil are basically duplicating what happened here in the U.S., where the outgoing president is not conceding the election, and so protesters attacked three government buildings, the Supreme Court, the Congress, and so on. And now the army has pushed back. So a lot of unrest there. Need to keep an eye on that. Probably not market impacting at the moment. Goldman's cutting 3,200 jobs this week, and Apple iPhone exports from India doubled to 2.5 billion. Apple had indicated that it would kind of diversify its production. I want to remind you that we have earnings this week. We do have some Fed speakers today, but to look at the week, we do have Fed's Chair Powell tomorrow at 9 a.m., nothing major expected there. China's inflation rate on Wednesday, but it's a relatively light week until Thursday. Inflation out of China on Wednesday, PPI out of China on Wednesday. And then Thursday at 8:30 Eastern, we get the U.S. inflation rate, expecting 6.5, prior 6.7, or prior 7.1. And the core inflation on Thursday for the U.S. expected at 5.7, the prior 6. Get balanced trade that day. And on Friday, we have GDP out of Great Britain, and then Michigan sentiment prelim. So relatively light-ish week, except for the inflation number. And then we get into earnings on Friday. So it'll be very interesting to see how that plays out. Just a quick look at the stats for the S&P. I want to remind you that Convergent publishes these rotations, usually for members only, but these rotations are important. You can see the rotations have increased as marked by this green uptick. 7 points is the normal harmonic rotation for the ES. For those of you who have been around for 20 years of trading, the normal harmonic for the ES is about 3.5. So we're still in an elevated environment. For the NASDAQ, 24.5 points. For the Russell, stayed the same at 3.6, and the Dow has gone up to 49. I think it was 48 before. And the crude pretty steady at 30 cents. Those are the values by which I set my fixed stops when I have to use fixed stops. Again, market sentiment is mixed to bullish. We're hanging on to Friday's highs, and that's what we've got. The S&P has traded 211,000 contracts. The inventory is 100% long. This only means that 100% of the volume so far in the session has occurred above the close. That's all it means. Doesn't mean I have an inventory of who bought and who sold. It just means we're just looking at how much of the volume has occurred above the prior day. We're using the close as a reference. The range is quite small, though, 22 points. And the point of control shifted quite higher. Now, if I'm not going to play back Friday's stuff, but if you recall, the main theme for Friday was that we are in balance, we are coming into balance, and the expectation is we're very likely to respond. And I've talked about this quite a bit, the gap to settle. No, I'm not talking about a Porsche GTS. The gap to settle trade is the key trade for the day. But I also talked about the potential for a push into 39.20. If it pushes into 39.20, we do have a weak high up there, and I expect it to be broken. If we do push away, then we're looking for a small pullback for a continuation, and the big number up above, the big bounce up above, we'll look at that in a minute, is 39.92. That's the big number we're looking for on the upside. So what did it do on Friday? It gave us the gap to settle trade to the tick. It went right to that 38.29, which was the closing / settle price. And then from there, we rallied. Really decent rotations. You can see here, once it broke the mid, the short side goes neutral. Those of you who are in Convergent, we walk through this on Friday through our chat room. Once we get above the mid, the posture is neutral, and then what we got is a beautiful pullback to the full session VWAP, RTH VWAP, RTH mid. But if you had missed that pullback, it's okay, because the structure was there. Now it breaks the high, pulls back to the prior high, pulls back to the prior high again. A weak high, double IB high stat now in play. That's an 82% historical probability that the initial bounce high has broken, and we've got something to lean against back here, and we've got a stat. We've completed the gap to settle trade, so we're looking for this thing to push right out. And if it does push right out, 3,900, which has been a battle zone for quite some time, 3,900 becomes the key scale out area. And if the 3,900 goes, then we're looking for 39.20, which is right here. 39.20, that's a weak high expected to be broken. Pushes through, pulls back a little bit, and then that's all she wrote for Friday. 39.1550 was the settlement price. Here's the big picture. Anyway, those of you who are here heard all that. We were up here, and we were looking for it to come back to settlement down here, and it did so. And you could see the profile, multi-distribution, thin, trending type profile. It did leave behind several rows of single prints. The S&P left behind weak structures at 38.75, and then remember 38.60 is the balance point, and then again at 39.04. We've looked at 39.04 quite a bit, and now we have these single prints up here and down here, and we're opening up in a gap just above. So we're trading at 39.34 or 39.35, just above our prior high, and we have basically transitioned away from this balance zone here. Okay, so I talked about this, for those of you who are here, I talked about this multiple times last week, that we had very sharp balance in this area. And, you know, the auction being the auction, we don't hold on, we don't stick around in balance for a long time. So as we talked, you know, I mentioned the word kurtosis, Curtosis. The sharper the kurtosis or the profile, the more pointy the profile, the more fuel there is for a breakout trade, and the catalyst would have been NFP. We saw a responsive open on the NFP, but then once it could not hold on to those prices below, it was clear that it was likely to break higher, and that's what we got. Here's the TPO detail. Here's what we talked about. We talked about this quite a bit. This is your kurtosis here. Very sharp. Remember, balance. A standard histogram looks like this. Okay, that's a standard histogram with one standard deviation representing 68.2%. This is what we call normal. But when the profile looks like this, there is a very high concentration, and then what you have is value starts getting very, very much compressed, which is what we saw here, and that becomes fuel for imbalance or trend or momentum, and that's what we got. So this day here is part of the balance, so I'm gonna suck it back in here. So now it's included in this profile, but this is an imbalanced profile. It remains as it is unless we pull back and come back down. Then this becomes part of this, and this expands up just a hair like that. So the market did the job just as we would expect, and now we are really on our way. It looks like we're on our way. We're inside of the prior balance right here, prior microcomposite, and the point of control of that prior microcomposite is 39.92. 39.92. That's why it's the target. Okay, so we'll play the rotations down. We're day traders. This is likely to happen over several days or whatever, but overall, we got what we wanted. The NASDAQ, however, much weaker. If you look at the NASDAQ, it went through the prior day's low. So the NASDAQ has had an extremely balanced prior day, and the settles right here, and the low for the NASDAQ went all the way through. So it had a kind of a bullish engulfing day on Friday. It opened in the middle instead of on top, and then went through and pushed back up. But the NASDAQ is really in a multi-pronged microcomposite situation. It's got many price tiers to go through. The techs have been just relatively weak. Remember, the NASDAQ finished the year last year down, off the top of my mind, 33%. I believe the S&P was down 19.8 or 19.6% for the year. So you could see that the NQ is just quite a bit weaker, and that's carrying over from last year. So we're going to include Thursday's action into this microcomposite, and guess what? Even though we had a profile that is a momentum profile for the NASDAQ, it is special in that it is still in balance. You can see it's still within that big composite. So guess what? We have to incorporate this into the composite, and now we see that we've got this really heavy area down below. This is your support for the NASDAQ. In the NASDAQ, we talked about 11,050 to 10,890. Those are kind of that's the box. This is not 56, this is 50. So that's the box that we've been in the NASDAQ, and that's essentially where this is, right? This is where this heavy volume is. This is likely to behave as support for the NASDAQ on any push down. The NQ is up here at 11,176, settlements 11,114, 11,114. So this morning, if you're trading in the NQ, it's really important to keenly watch for sellers coming in and getting price progression. In other words, they come in and they sell and price falls relatively easily. The NASDAQ then sets up a gap to settle trade, yes, because it's in balance. The market is in balance in the NASDAQ, so we're looking for the prior key references to be tested. Settlement is a big one. So we're looking for a gap to settle, a GTS trade in the NASDAQ early on. I'm not telling you to sell on the open. I'm saying if it starts to, the ideal situation is it tries to buy them, and it has a hard time, despite the effort, it has a hard time getting better prices when it buys. This sets us up for a really good short with really limited risk back towards the settlement price for a gap to settle trade. That's what I'll be looking for. Once it fills the gap, it still has room to 11,050, and we'll see if it reacts there, bounces back up. I would look, if we do a gap to settle trade in the NASDAQ, I would have to see a large impulse up in the NASDAQ. The impulse value for the NASDAQ, and I'm sharing quant information here that's reserved generally for convergent traders, it's 41 points or better. If we get a rotation of 41 points directionally without a single 50-tick pullback, if we get that, basically cancels the idea of staying short. So an impulse up cancels the short side. And if I'm looking to be long, or I'm holding long, if we get an impulse down, that cancels the long for me. So I know that may be confusing. Of course, I suggest you check out Convergent, maybe take a month or something to kind of learn about this stuff. But really, I'm looking for this thing to be responsive and then to consolidate up here. I don't expect too much action today. I really believe a lot of it's been priced in. So today is likely to gyrate. Friday finished with the point of control near highs. The point of control, close and settle were all at the same price on Friday at the upper end of the range. So those of you who've been around know that this is an incomplete auction. So we expect it to push higher, and it did. The S&P ended up pushing to 3938.50, but it may rest. So this is an impulse trade on a day basis, and this is likely to be the resting day for the continuation. So today, let's, it might continue to run, but let's moderate our expectations for breakouts. Kind of trade your trade modestly with modest targets. I always cover risk quickly. I look to cover risk quickly and then let runners run if they may. Okay, so that's the NASDAQ. That's the ES. This is a quick look at crude. Crude has had this gap here that it filled in on Friday. Friday broke the one-time framing down on crude. Crude looked like it was headed for $70, and Friday reversed that. Again, the reopening of China is going to put demand on energy. It's going to put demand on metals. Commodities are hot still. And what crude is doing today is it's gapping open and it's testing down. So I expect crude to fill the gap right here at 75.48 or so. And then I want to see if it bounces from there and continues to fill the gap to the upside, or if it breaches into the prior range. In that case, that I'm looking for, again, a gap to settle trade with a higher low. Crude is one time framing higher. I know that's a lot to digest, but that's trading for you. Let's take a look at the NASDAQ real quick here. You can see it's hanging on. We have a double distribution profile early on in the NASDAQ. Very important for the bulls to hold on to this 11,160, the 160 area. Very important retest here, price wise, price action wise, profile wise. And with VWAP and mid there, the ES, the equivalent is the prior high, 39, 28, 75, 29. We need to hang on to this price right here. A lot of confluence here. We do have a double distribution in the ES. That's another indication. If it cannot hold on to this 39.29 area, it's another indication that we're likely to see 39.15 early. It's a lot of info. I'll leave you with that. There's a lot going on this week in terms of price action as we have broken out of balance. And then we have earnings on Friday, CPI on Thursday, and that's what's likely to drive revaluation. Okay. I don't know if you took the poll here or not. Looks like 258 have answered. I asked, was your first trading week of 2023 off to a good start? 57% of you said yes, which is fantastic. 9% said hell yes, so probably had a really good week. 25% of you said no. Okay, mind your risk, control risk. This is what's going to keep you in the game. Give yourself time by managing risk. Really, really important. And then for those of you who said hell no, go work on your risk management plan. Do not give up. There's not one trade or a single trade worth defending with your account. Make sure you have some risk controls. Speak to your broker about auto liquidation. Keep yourself out of trouble and allow yourself to come back for another day and another chance to figure this out. Okay, so congrats to those of you who had a strong week. Looks like about 68% of you did, 2/3. That's fantastic. Pay attention to the auction, mind your risk, and I hope to continue to see you around. Good luck. Don't forget to subscribe to the channel and to hit the like button before you leave. Cheers.